Good afternoon and welcome to Sherry FitzGerald's First Time Buyer webinar. My name is Shane Quinlan. I'm Managing Director of Sherry FitzGerald Financial Services and I'll be your host today. Sherry FitzGerald is Ireland's largest property advisory company with a network of over 100 offices across the country. We're also one of Ireland's largest mortgage and insurance brokers. With over 40 years in the property sector and 25 years in financial services, we give our customers expert advice at all stages of their home buying journey. Today's webinar is the first in a series of events we plan to host in 2023 to help guide prospective home purchasers. Today, we're starting very much with the basics. We're going to cover the supports available to first-time buyers looking to purchase their first home and also offer guidance on how to get mortgage ready. This webinar will last 45 minutes and will include a panel discussion after our two presentations. Thank you to everyone that submitted some questions during registration. We have incorporated some of those into the presentations today, but we will look at putting some of those questions to our speakers during the panel discussion after the presentations. I'd also encourage everyone to pop any questions they might have into the Q&A function at the bottom of the screen. We will endeavour to cover as many questions once time permits. So I'm delighted to introduce our panel for today. Marguerite Boyle, Director of Sherry FitzGerald New Homes, has over 15 years working in residential and commercial property in Ireland. Marguerite is going to discuss the supports available to first-time buyers during today's webinar. I'm also delighted to be joined by Noreen McKenzie, Associate Director of Sherry FitzGerald Financial Services. Noreen has over 20 years as experience as a financial broker and will take us through the various steps to getting mortgage ready today. Before I hand over to Marguerite, who will give the first presentation, I just want to touch on some of the more recent developments in both the property and mortgage market that are very relevant to first-time buyers and to today's presentations. I think rarely a day goes by where housing or mortgages is not very prominent in the Irish media. First thing I want to mention is the Housing for All, which is the government's plan, National Housing Plan, which was released last year. And that's a plan that takes us out to 2030, which is designed to improve Ireland's housing system and deliver more homes for people with very different housing needs. The target of that plan is to deliver over 300,000 new homes in Ireland by 2030 to keep pace with the population growth that we've seen in recent years, but also the housing demand. Housing for All includes a number of supports for first-time buyers, and Marguerite is specifically going to cover off a couple of those supports during her presentation today. The second area I want to mention is the central bank lending rules. So in 2015, the central bank introduced lending rules to control the volume of mortgage lending in the market, but also protect consumers. This applies to both first-time buyers and second-time buyers. After 7 years, the rules were reviewed last year, and in November, the central bank announced some changes, which included some changes to the lending limits for first-time buyers. So since January of this year, first-time buyers can now borrow up to 4 times their gross income compared to 3.5 times for the previous 7 years. Noreen is going to cover off what that actually means in more detail during her presentation. Final area I just want to update you on is there's been a lot of change in terms of the mortgage market in the products that have been available to all customers, but specifically to first-time buyers as well. There's been a lot of variation in terms of interest rates that are available in the market, whether that's fixed or variable. A number of lenders have introduced longer-term interest rates, 15, 20, 25 years, which has become a lot more popular in the market certainly in the last 2 years. Other lenders offer cashback. They cover legal fees as part of the mortgage process. And other lenders are offering discounts as well based on the size of the mortgage, but also the energy efficiency of the house that's being purchased by the mortgage as well. So a lot of moving parts in the mortgage market in the last couple of years, and we will explore that further in the panel discussion. So without further ado, I'm going to hand you over to Marguerite, who's going to talk about the supports available to first-time buyers. Hi, Marguerite.
Hi, Shane. Thanks, and hi, everyone. So as Shane mentioned, I'm going to cover off some of the schemes available today for first-time buyers, 2 of which are the Help to Buy scheme and the First Home scheme, which I'll be focusing on. So first up, the First Home scheme. So what it is essentially a government-backed scheme which aims to bridge the gap between the price of new built homes and what first-time buyers can afford. So, the first-time buyer will have a mortgage and generally a deposit, which will be Help to Buy and savings, which I'll come back to. So it is open to all first-time buyers, but it's also open to people who are recently divorced or separated, and that's under the government's Fresh Start scheme, and that also includes people who have been insolvent. So the property does have to be a new build, and you do have to max out your mortgage approval. So as Shane mentioned, if you're a first-time buyer, that will be up to 4 times your gross salary. So once you have that amount, so you do need to get your AIP or approval in principle from a participating lender. So participating lenders are the pillar banks, which are namely AIB, which includes Haven and EBS, Permanent TSB, and Bank of Ireland. So once you've done that, then you can apply for the first home scheme, and the government will take an equity share in the house. So being an equity share, it's not like a loan. It will fluctuate with the value of the house. So as the value of your house goes up, so will the amount that you owe. And you can pay it back in partial redemptions if you like, but you do not have to for the first 5 years. So you can do that twice a year. You do need to get a valuation when you do go to pay back the redemptions, and it's a minimum of 5% of the equity taken when you do go to repay. But as I said, you don't have to pay it back for the first 5 years. So this is good if you're a first-time buyer, you're conscious of your repayments and the affordability of your mortgage. After year 5, then a service charge will become payable. Now, this is 1.75% for the first 10 years, say post year 5, and that would be 1.75% of the equity taken. And then it rises to 2.15 for the following 15 years, and then to 2.85 in years 30 plus, but still substantially lower than funding it through a full mortgage. And I'll go through a worked example actually, which will show this. So in terms of the caps, so there is a cap for each different area of the country, which is based on the local authority that the property is located in. So, and there is different caps for apartments and houses. So the apartment caps in Cork and Dublin are 500,000. And then for the urban centres of Galway, Limerick and Waterford, they're 450,000. Then looking at houses, the cap for Cork, Dublin and Wicklow was 475. That reduces to 425 in Cork, Galway and Kildare. And then looking at Galway County, Kilkenny, Limerick, Louth, Meath and Westmeath, it's down to 375. And then for Laois and Waterford, 350. And for the remaining of the country, it's 325. So I must say here as well that these caps have recently been increased. They're increased at the end of last year. And the government will look at these every 6 months just to see how they sit with construction price inflation and things. So it's good to see that will be looked at into the future. So moving on to the Help to Buy scheme. So this can be used in conjunction with the first home scheme. And this came in back in 2015. And it was really when the government identified that first-time buyers were struggling to come up with large deposits. Obviously, first-time buyers tend to be paying high rents. So this is a way for you to claim a tax rebate for your deposit. So it is in conjunction with revenue. So they will look at the last 4 years income tax you have paid, as well as your DIORT tax. And then you can get up to 30,000 towards your deposit. You do apply, as I mentioned, through revenue, and in order to qualify, you do need to sign your contract before the 31st of December 2024. And that is for a new built house, but also in the case of a self-build, you would need to have your first drawdown before that date. Now, they have extended this date in the past, but that is the current deadline you need to work towards. The cap for this scheme is 500,000. So that means the property that you're buying needs to be priced at 500,000 or below. And I should say as well that the 30,000 is the max amount. So it's 30,000 or 10%, whichever of the purchase price, whichever is lesser. And you can check your eligibility on the revenue website. So I think the best way to explain how these schemes work in conjunction with each other is a worked example. So I show here a case study. So this is taking an assumed purchase and assumed purchaser. So the property you see here on your left is a sample property, a Derrig in Adamstown. We sold these on the weekend. This example is for a 3-bed terraced house priced at 460,000. So on the right-hand side, you'll see a mortgage calculator, and this mortgage calculator can be found on sherryfitz.ie/mortgage calculator. I'll pop up the link at the end. And you can actually go onto this interactive calculator, pop in all your details, and it will give you back kind of the information that you need. So if I take you through this example, on the right-hand side, you'll see I've clicked yes for first-time buyer, assuming they are first-time buyer. Yes for a new built home, because I'm using the case study of a Derrig. Yes, we want to use the first home scheme and the help to buy scheme. So I've also clicked that. I've indicated that the property is located in South Dublin, or Dublin South County Council. So this is important because the caps are different in the different county councils. The property type, it's a house, and the property price is 460,000. So you can see there that this on the information on the far right-hand side will be what the calculator will give you back. So the minimum cash deposit required. So this is the deposit required in cash by the purchaser, assuming they are eligible for the full 30,000 help to buy. And how that is calculated is essentially it's 10% of the purchase price, which is 46,000, and that is the typical deposit that would be payable at contract signing, less the help to buy rebate of 30,000. So that gives you the 16. So when you take the 16 and the 32 and the 30,000 from the 460, it will give you back the amount of first home scheme available, which in this case is 92,000. So that's 92,000 towards the purchase of the house. So that means your loan amount is 322,000. And in order to qualify for this loan amount, your household income, which you can see at the bottom right-hand corner, it needs to be 80,500, and your repayments in the first year will be less than 1,400, which you can see is much more affordable than, say, typically renting in this area would be a lot more expensive. So it is a fantastic incentive for purchasers. It's a great support, and it does make your repayments much more affordable. So I've put here some links towards, if you want to do a screenshot maybe of these links, they're very helpful. The First Time Buyer Hub on the Sherry FitzGerald website has lots of information about the schemes I've mentioned, First Home and Help to Buy, but also just general information about getting ready to buy, searching for your first home. Then the First Home Scheme website, again, this is the government website, very user friendly. It's where you can apply for the First Home Scheme. You can do that all online. Then the Help to Buy scheme, as I mentioned, is managed through Revenue. So that is all done through Revenue Online. So you can input your details there to see what you're eligible for. And then finally, the mortgage calculator, which I think is a good first stop for people who've kind of seen a house that they like, just to see, are they in the ballpark for what they can afford. So that's me finished. So I'm going to pass you back to Shane now to discuss further.
Thanks, Marguerite. Great overview of the supports available there for first-time buyers. I would encourage you to take a screenshot there, because there is a lot more detail behind what Marguerite has just spoken about in the last kind of 10 minutes. So do take the time to research a bit more in terms of the various schemes that we've discussed. And thanks, Marguerite. We will discuss, and there's a lot of questions coming in, so we will get an opportunity to explore some of them in the panel discussion. But now I'm going to hand over to Noreen. Noreen is going to talk us through the steps to getting mortgage ready if you're a first-time buyer. Good afternoon, Noreen.
Good afternoon, Shane, and welcome everybody to our Lunch and Learn here today. I suppose I'm going to speak to you today just in relation to getting mortgage ready, and I suppose some top tips on what you need to do. The top questions I always get asked are, how much can I borrow? What do I need to do to qualify for a mortgage? And what actually is important for the lender? So I'm just going to walk through those three in a little bit more detail with you here today. So firstly, how much can you borrow? Okay, so this is going to depend on a number of things. So firstly, I suppose it's important to note that the lender has actually 3 sets of criteria. We tend to focus quite a lot on the income and the income multiples, but that's not a guarantee that you're necessarily, just because you qualify on your income for 4 times, it's not necessarily a guarantee you're going to get that. There's 2 other criteria, which is proven repayment ability and then your minimum disposable income requirement. And I'm going to talk through those throughout the next 3 slides as well, just to give you a little bit of background and the importance of these also when you're getting ready to make a mortgage application. So I suppose firstly on income, which is the one that we tend to hear about all of the time. So lenders will look at your guaranteed income and also variable pay, but it is important to note that these are treated differently. So your guaranteed income is automatically included in your 4 times, okay? But variable pay tends to be averaged, and generally speaking, the lenders don't take all variable pay fully into account. So in an example of that, you may have commission, you may have bonus, you may have overtime. Generally speaking, what the lender will do in that case is they will actually average that over the last 3 years. So, and then they will take up to 50% of that income and add it into the multiple, okay? Then your age and the maximum term. So obviously the maximum term of a mortgage is up to 35 years. And this needs to be completed by age 70, okay? It's important to note that not all lenders will go to age 70. And for those that do, they're going to look for you to have some pension income in order to service that debt after retirement age of 66. So again, it's not a given that you will automatically get to age 70. Your outgoings, including other loans and commitments. And again, this is something where a lot of the time I would get asked from people looking to apply for a mortgage, should I clear my loans? You know, is it better if I don't have any loans? And the answer to that is it's really case by case. I would advise people not to go clearing any loans without having spoken to an independent financial advisor prior to that, somebody who can go through your specific circumstances and advise you as to what is the right thing to do. Because sometimes if you're using your savings to clear your loans, then your deposit amount is falling, and it may well be that you would have been in a position to service that loan with your mortgage. So you're always better off just holding on to your money and then let make that decision if the lender insists that you need to do it. Also, existing loan commitments also feed into your proven repayment ability if they're not going to continue after you've taken out the mortgage. And then other living expenses. I suppose it's important to note that banks, like a mortgage application now is a snapshot of your 6 months prior to you making that application. So banks do scrutinize your bank statements. They do examine them. And I suppose from a bank's perspective, they get one opportunity to actually lend to you as an individual over a 20 or 25 or 30 year term. So they want to ensure that you're a safe bet. So this is why there is a lot of scrutiny in relation to how you manage your bank account, you know, your existing loans, credit card debt. So it is really, really important to note that. And again, as I said, I would always speak with an advisor in relation to that. Let them see those statements so that they can help and advise you so that you're not making an application and possibly you may not be successful. So moving on then to what do I need to qualify? So again, your deposit and your savings is important. With banks, you can borrow a maximum of 90%. Now, obviously, with the Help to Buy scheme, that can feed into your deposit as well. But it is important to note that you do need to still be meeting that proven repayment ability piece, whereby you are showing to the bank that you can afford to repay the mortgage at today's rate and at a stressed rate of plus 2%. So it's really, really important that you do set the habit of regular savings as well. Your employment status, obviously the banks will look for somebody who's in a permanent position. They look for someone to have completed their probationary period. They will consider people on fixed term contracts, but generally rule of thumb is that you would need to be in a second term fixed term contract in order to be considered in relation to that. And also, I suppose it's important to understand the costs associated with purchasing a new property or the mortgage itself. So obviously you're automatically going to have stamp duty on any property that you purchase. You're going to have to engage a solicitor, so you're going to have solicitor's fees, and you're going to have a valuation fee and possibly a final inspection fee if you're buying a new home. And also some brokers will have fees as well. They'll have an application fee or fees. So it's important that you can show to the bank that you have the funds to be able to cover all of these costs as well, because they will factor them into their balance of funds calculation in the money that they will require you to have in order to qualify for the mortgage. So then what is important for the lender? So I briefly spoke about the criteria, the 3 separate criteria, and I'm going to go into a little bit more detail on this slide in relation to those. So obviously your repayment ability, this is that proven repayment ability. And banks, with the onset of the extra 4 times income now, banks are really focusing more and more in relation to this to ensure that you are a safe bet, to ensure that you're showing that you can actually afford to repay the mortgage. And as I said earlier, you can do this through your rent, through savings, through loans that possibly will be cleared prior to or completed. So you may have a car loan, but it's only 6 months to run on it. So by the time you take out the mortgage, that loan is going to be cleared. So you can use that to factor into your proven repayment ability as well. Your credit history, this is really, really critical. If you've had short-term debt in the past, if you've had credit cards, that is all recorded on the Central Credit Register. And it's important that you have a good pay history on those. The banks will automatically do a credit check through the Central Credit Register on all applicants. You can do it yourself. You can carry out one free of charge on yourself. So you can check that this free any application to a lender to ensure that you actually do have a good credit history. Your lifestyle, obviously, as I said earlier, the banks will look at the last 6 months. So they're going to take a snapshot of how you have managed your funds over that period of time. Sometimes going to your own bank in this instance can be a disadvantage because obviously they've got a lot more history on your banking. So sometimes, you know, customers would come to me and they'd say, oh, my own bank, you know, won't lend me the 4 times, or they're restricting how much they lend to me. And you can find another bank with just the 6 month snapshot are happy and are prepared to go the 4 times. So it's not always a given that your own bank is going to be the best bet. So again, really, really critical that you do take, you know, you go look at the market and you get the best mortgage that's out there for your specific circumstances. And then my last point here is simplicity. What do the banks want? It's really, really important that it's a nice, clean, easy to assess application. And the one thing that I come across with so many applicants is too many bank accounts. You know, they have the bank account that was set up with their, you know, their mum set up or their dad set up for them when they made their first Holy Communion, and there's very little money going in and out of that account, but it's still a live account. So it means you have to submit 6 months statements on all of those accounts. So I suppose my top tip that I would give to people here today is simplify your banking. You know, have as few accounts as possible, but also note that if you are closing bank accounts, make sure you keep a paper trail. Make sure that you actually have a closing statement just in case you're asked in relation to it. But definitely I would say, you know, have one current account, have a savings account. And again, it's very, very good to have a separate savings account. You know, decide how much you can afford to save on a monthly basis. You know, put it into that account and forget about it. You know, if you're, you know, saying, oh God, I can save £2,000 a month, but then halfway through the month, you're taking £1,000 back out. You know, so it doesn't look as good as you putting 1,000 in and leaving the 1,000 there and not touch it. So I would say simplicity, minimize the documents that you're going to have to collect for the lender. And as I said, you're on the road to success, but also do speak to somebody who has got market-wide agencies that they can advise you on all of the lenders that are available in the marketplace so that you can ensure that you are getting the best product for your specific needs. And I think there's a final slide there that's just got some links as well, helpful links. So again, I'd advise you to take a screenshot of this. There's just a guide there that we have just in relation to getting mortgage ready, which will give you a little bit more detail on what I spoke, the mortgage calculator, if you would like to book an appointment or speak to a mortgage advisor. So all of those links will help you in that regard. So thank you very much.
Great. Thank you, Noreen. Some great tips there. Whistle-stop tour in terms of the important steps to getting mortgage ready. We're now going to move into the panel discussion, and thank you to everybody that has been have taken the time to put in some questions into the Q&A function. We also received, I think, over 100 questions came in from those as they were registering as well. So I'm going to start maybe with Marguerite. There's a couple of questions, Marguerite, at registration stage in relation to the pros and cons of buying a new home versus an old property. And I know you might be slightly biased considering you work in the,
Just slightly.
in the new home division, but
No,
what would you like to share with our attendees?
Yeah, it's a very good question. And I suppose the major pro that would come to mind initially is a new build is future proofed. And obviously with the cost of energy and even just to get a builder or someone to carry out the works in your property, I think buying a new build, especially as your first property, is a very good idea, because everything is new, from the fabric of the building to the heating system to the kitchen. Generally your appliances are included, so everything is brand spanking new. And especially when you have so many costs associated with buying a new property, having a new build just gives you peace of mind, because exactly, you're going to be able to walk in there with your suitcases and do some painting and put up the curtains and the light fittings, and you're good to go, the flooring, and you're ready to go. Older properties obviously have their appeal. They tend to be in more established areas that people tend to know, but then vice versa, when you're moving into a new community, everybody's moving in together. There's usually a very nice, there's WhatsApp groups and community pages, and people of all starting out together, which is also nice. I suppose the other thing about buying a new build is it's a fixed price. And when you're buying, I know anyone who's bought a secondhand home can contest that it can be stressful, when you're bidding for a property. Whereas when you're buying a new build, what the price is. There's no negotiation, and it's kind of first come first serve. So it's very transparent. So especially when you're buying a first property, I think that is important, to take away some of the stress.
And energy efficiency in terms of BER ratings.
Yeah, and like Irish property new builds are incredibly well specified. Like you're talking, A-rated, nearly zero energy, air to water heat pump systems, and if you're retrofitting those items into an older property, it becomes very expensive. And there is government grants out there to assist, but it's difficult to do. And then also you have to consider, alternative accommodation while those works are being carried out if you do need to do a retrofit. So yeah, you do have that, peace of mind of really nice, warm, energy efficient home.
Yeah. Noreen, I might just come to yourself. I mentioned in the intro, obviously the lenders have introduced a number of different features to their mortgage offerings in recent years, and Marguerite was talking about the energy efficiency and the green rates that are available on kind of some mortgages. We did have a couple of questions around kind of cashback or no cashback, fixed, variable. Maybe you might just kind of give us an overview in terms of all the different options and considerations there.
Yeah, absolutely. And I suppose it's one part of the mortgage market that has got a lot more complex, and where different things will actually be more appropriate for a different buyer. Like obviously the cashback, a lot of the time first time buyers love the cashback because it could be the money that is going to pay for the beds, the table and chairs, get the tiling finished. And I suppose what I would say is it is a very individual service that we offer. So by advising our clients on, cashback, the lenders that have cashback versus the ones that don't, generally speaking, you'll find the rates will be slightly higher if you're availing of cashback. So for some people, it's really, really important to keep their monthly payments down. For others, the cashback will be more important, and obviously fixed versus variable. We've come out of a time of, I suppose, historically low rates. Would have been unheard of up until the past 2 years for a fixed rate to be below 2%. And obviously, the European Central Bank has been raising rates consistently since July of last year, which now means that fixed rates have increased quite significantly, and variable rates have increased as well. But I suppose the big thing about that is to note that You know, they were historically low. We've never seen rates as low as that before. They're moving back to more of a normalized level where they are at the minute. Like between 3 and 4% is a more normal rates environment in the marketplace. Again, the fixed rate obviously gives you security. Once you've drawn down your mortgage on a fixed rate, you know exactly what your repayments are going to be. So I would find that a lot of first-time buyers value that. They want to know exactly how much their repayments is going to be. And obviously their circumstances are going to be improving year on year. If they're in employment and they get increases, it does become more affordable. So I would find a lot of them would, you know, choose fixed over variable. Obviously one of the pluses of variable is that you can obviously, you know, without any restrictions, you can overpay, you can throw lump sums off the mortgage. Where there are restrictions, you can still overpay on a fixed rate, but in that regard, there are restrictions involved, and it's something that's really, really important to discuss again with whoever, you know, you're talking to about your mortgage, that if that's something that's important to you, it's really, really important that you're aware of the parameters around that so you don't incur penalties. But yeah, look at the green mortgage rates then have again complicated it, you know, and in a good way for buyers, because it means that they're actually getting, you know, decreases on their rate for more in energy efficient properties. But again, it's all pointing to, you know, another reason why every buyer should be talking to somebody who's got wide market knowledge that can actually help and advise them. So it's about giving our clients or any client all of the information so they can make an informed decision and ensure that they're getting the right mortgage out for their specific particular circumstances. So I think that's key when you're actually sitting down to discuss rate, lender choice, and all of that.
Yeah, I think the key message, Noreen, it's all on a case-by-case basis in terms of the options that are available, and to sit down and talk to the expert. And obviously, as a broker, having that kind of whole of market view was obviously an advantage with the changes that have happened in the mortgage market in the last couple of years. There's a lot of questions coming in relation to kind of timing. When's the right time to start your kind of mortgage application? When's the right time to start your property search? I might start with yourself, Noreen, just in terms of, you know, some people asking, do you gather a deposit before you kind of speak to a mortgage advisor? You know, when is the right time to start that discussion?
Yeah, and there's sort of two answers to this, Shane, really. Like, I suppose initially what I would say is I would speak to somebody as soon as possible, just purely to ensure that you're doing everything right, okay? So that you get the parameters in relation to what you need to be doing in order to be successful when you do make that application. I would find some clients will come to me and they're absolutely have been doing everything right. Others will come and they think they've been doing everything right and they've been working really, really hard for 6 months, but they've made an error of, you know, putting in the savings, taking it back out, you know, little things like that that can trip up a buyer. So I would say it's critical to speak to somebody as soon as possible. It might be a case that might take that little bit longer for you to actually physically get to the stage of making the application. But that's part of the service that we would offer, is that, you know, we would work with the person to ensure that we get it right when they do make the application, so that they are doing everything right. Like, obviously from an approval in principle perspective, that's sort of the minimum requirement now. If you are looking for, you know, to make a bid on a property, be it a second-hand property or a new home, that process is taking 6 to 8 weeks at the moment with some of the lenders. Others are a little bit quicker than that, but you know, so it is important as well that you give yourself time in order to, number one, ensure you have time to make the application. So you're going to a new homes launch with your approval in principle in your hand, or equally to ensure that your mortgage is going to be, your application is going to be successful when you actually do make it.
Yeah, I suppose, Marguerite, on the property side, what advice are we giving clients in terms of when to start that kind of property search? Is it come after you get the approval, or?
Exactly, yeah. The first port of call is absolutely get your mortgage sorted and find out what your budget is. And that will really lead the search. And also with the incentives in place, you do need that AIP or approval in principle before you, if you do wish to check, can you get the first home scheme? So that could change the parameters again. So definitely the chain of events are mortgage, check what you're eligible for in terms of first home and Help to Buy, and then really focus in on your property search. Like, it's good to know in the back of your mind kind of what you would like, and then try and, you know, have a kind of broad search. And then once you have the AIP and the schemes you can focus in on what you can afford. But certainly mortgage first, then property search.
Couple
Because
of
in
questions.
order to put an offer on a property, you would need AIP, because the process is quite quick. Once you find a house you like, you put the bid in, your offer is accepted. You then have about between 21 and 28 days before you have to sign your contract. And in order to sign your contract, you need to have your full offer. So definitely mortgage first.
Very good. Marguerite, a couple of questions just coming in relation to the both schemes that you discussed. So if a husband and wife are working professionals and they haven't used any of the, the first home or the kind of Help to Buy scheme, can one use their credits and then the other person in the application save theirs for a later date?
So it's generally like with the first home scheme, if one is a beneficial owner of a property already, which I assume they would be if they're husband and wife, then they can't avail of it again, if you know what I mean. Like they can only be beneficial property and beneficial owner in once. So you're essentially a first time buyer once. So if the husband or wife had already purchased and the other was a beneficial owner, then no, they couldn't avail of it twice. It's just open to a couple as a couple.
Noreen, there was some changes to the central bank rules around that recently, wasn't there, in terms of if you've been divorced or separated and stuff like that?
Sorry, yes, for the Fresh Start scheme, Noreen, yeah, you're correct.
Yeah. But equally, it's really, really important because there are some finer prints in relation to that. So I think it does specify that you need to have not gained from the disposal of a property as well. So it's in an instance where you have walked away from a family home per se and you're starting from scratch. That's where you're going to be classed as a first time buyer. So like if we'll say you separated and divorced and you sold the property and you got 50% of the share of it and the spouse got the other 50%, in most instances that will disqualify you as well. So it is important to just look at that, as I said, the finer detail of that particular one, and not just assume that just because you're divorced or separated and you've disposed of a property that you're automatically going to be classed as a first time buyer again.
Marguerite, just in terms of the process to apply for the first home scheme, it's on the firsthomesscheme.ie website, isn't it? And there's an eligibility calculator.
Correct.
Does the application happen online, or is it over phone, or what's the process?
Yes, it's actually all done online, and you do need to have your documents in order before you apply, but it is very user friendly. So I would encourage people to go have a look, because it is quite easy to use.
And in terms of the repayment of the shared equity element of the first home, how do people pay back the shared equity? A couple of questions in that area.
Yeah. So they do need to get evaluated, so they can pay it back in partial redemptions if they wish to do so. So it can be done up to twice a year. The minimum payment is 5% of the equity taken. And there does need to be a valuation, but the valuation of the property is valid for 12 months. So if you are doing it, you would do it in kind of bulk payments rather than small amounts gradually. And then it also would need to be paid back if the property were to be sold, or if it wasn't your principal private residence, it would need to be paid back in full.
Yeah, just looking at the questions, a lot of people asking about the eligibility. I think the call to action is to go to the firsthomesscheme.ie website and check the eligibility.
Yeah, but in general, it's all first time buyers purchasing new build homes.
Okay, very good. Thanks, Marguerite. Noreen, some questions around exceptions. Obviously, the change to the central bank rules now means first time buyers can borrow up to 4 times their gross income compared to 3.5 before this year. People are kind of asking, people that have AIPs at kind of 4 times income, can they be considered for an exception up to 4.5? In general, what are the lenders doing in this space?
Yeah, absolutely. Like the exceptions are still there. It is really, really important to note, though, that with the exceptions, there's increased criteria that you will need to meet. The lenders are enhancing that criteria, so they are more difficult to obtain. Most certainly you can get them up to 4.5 times. It's just really, really important. And I suppose my advice to all clients would necessarily be to go for the maximum approval that they can get. I mean, if they're eligible for an exception and they feel they're going to need it, most certainly then go for that exception. There still is a certain amount of, exceptions being more available earlier in the year, and there may be times when exceptions are not available. So, you know, it's not a guarantee to anybody. As I said, there is enhanced criteria that you would need to be meeting. And again, it would be really, really important to discuss that with whoever is looking after your mortgage application for you, as to whether it's something you would qualify for, if you feel it's something that you may need, and get that approved upfront for yourself.
Quite a few questions, Noreen, related to you know, a lot of prospective first-time buyers in Ireland in the future are living abroad at the moment. You know, they go to Australia, they go to Canada to work for a number of years, possibly London. What's the situation in terms of when they're living abroad, but they want to start that journey in terms of their mortgage?
Yeah, well, it is a limited market at the moment, and the Mortgages Directive, which was a piece of EU legislation that came in, has sort of restricted this market, but absolutely it is something that they can do. They can purchase a home to live in. Now, there's a couple of key criteria on it, in that they would need to be a PAYE employee rather than self-employed. The banks tend to look for, you know, a steady income that they can see. Obviously, you know, the currency that they're being paid in at the moment does factor into it as well. So there's a number of extra criteria they need to meet, but it is something. Another thing, they would need to still have an Irish bank account here. You know, but look, the product is there. We're actually doing quite a bit of business in that field as well. So it's something that it most certainly is open to the Irish diaspora abroad who are looking to return in the next 2 to 3 years. So it would be done as a home, though, that they would be buying it as a home rather than an investment property.
Yeah. Okay, very good. Marguerite, there's a lot of questions just in terms of where do people find out what new home developments are coming up. Some around Dublin are down the track, obviously. And there's a couple of questions in terms of what's the registration process for new homes that we're involved in?
Yeah, of course. So I suppose we do advertise anything that is, you know, either available at the moment or coming soon on sherryfitzgerald.ie under new homes. We also use property portals like My Home and Daft. You can generally find most of our schemes there. And then we obviously have signboards on sites where we are actively selling or will be actively selling. But also I would advise people, especially if they're first-time buyers, we do have a first-time buyer specialist to get in contact, and we can register their details for schemes meeting their criteria. And then they would receive emails about upcoming schemes. And we tend to give people a bit of notice when we are launching a scheme in advance. And we generally will advertise well in advance of a launch.
Okay. Question, is the first home scheme open to a second-hand house? It is, if it's your first-time buyer, I presume is the answer?
No, the first home scheme is not open to second-hand houses, and similarly with Help to Buy, just new builds. Yeah.
Okay, very good. Just looking at questions, we've over 50 questions, folks, so just bear with us. And we are running out of time. I have been accepted for Help to Buy, and I know the amount I can access. Where do I get the money? Can I add the amount in when I apply for my mortgage?
How do they access the Help to Buy money? Is it, Shane? Do you think that's what the question is? Yeah. So basically, again, this is one that can vary depending on whether it's a new build or whether it's a second-hand property. But if we just take a new build example, generally speaking, once they've been approved for their Help to Buy, the lender will look for a number of documents showing proof of that, which they download from the Revenue website. And once they've done that, they submit it with their application for approval. And then their sale agreed on a property. Generally speaking, a lot of purchasers would use their Help to Buy when they're due to pay their 10% deposit. So when they're signing legal contracts, at that point, their solicitor will draw the Help to Buy and will use it for that purpose. When it's a second-hand property, it's at the very end of the process that they would draw the Help to Buy scheme. It's not a second-hand property. It's only open to new homes. So, but a self-build. Sorry, that was the one I meant to say. That whereas it's a self-build, then it's generally later on in the process at the very, very end that they would draw those funds.
Very good. We're just coming to the end. Marguerite, one more question for yourself. Can a first-time buyer sign a contract without a letter of offer?
No, no, they would need to have this before they sign the contract. Yeah, and that's why we would always ensure that, you know, your AIP is well advanced in advance of going sale agreed, because it can add to the stress then of the closing process. So no, you cannot sign without the full offer from the bank.
Okay, great. Thanks very much for that. I'm conscious of time. We've just gone over the 45 minutes, so I am going to wrap it up. There's a huge amount of questions. It came into the Q&A function, over 50, as I said. I tried to pull out some of the main themes, so I hope we did get to answer a lot of your questions today. As I said, this is the first webinar in a series of events and webinars we're going to hold this year, so we will take a lot of the questions and try and formulate them in terms of the agenda for our future events. I'd like to thank Marguerite and Noreen for your time today and for your insight in terms of the supports available to first-time buyers, but also the key steps to getting mortgage ready. A couple of people asked if the recording would be made available to those that have registered and attended. Yes, it will be, and we'll send a follow-up comms out on that. And if you have any kind of specific queries from the webinar today, I would encourage you to contact our first-time buyer specialist team at first-time-buyer-specialist@sherryfitz.ie, or give them a call on 01667 1888. Thank you everybody for your time and your attendance today. I hope you got a lot out of it. Again, thanks to Marguerite and Noreen for the excellent presentations, and we'll see you all again soon. Keep an eye out on social media channels and on your email for future events. Thank you.